investment properties. Evan, I want to buy an investment property. I want to grow my residential portfolio and start getting some of this rental income I see others getting, but my income might be a little bit too low, or I might not qualify. So here's the skinny on investment properties. There's actually a couple cool things you need to know. One is when you buy an investment property, the lender gets to use the projected rental income to offset the expense to a certain degree. So a lot of clients will actually qualify for an investment property because you get to use some of that projected income. So if you have $1,000 a month payment, for simplicity's sake, on an investment property, you get to offset $750. So only $250 of it goes to your debt to income ratio. So a much smaller, and when you start to add that up for an investment property payment, it really does add up, but then it brings the payment back down. So that's one thing to keep in mind. Now you do need 20% down for most investment property programs, so you do need your down payment for that. The other thing is called DSCR loans. So those are loans that are driven by the investment property income, and you're qualifying based on the income of the property, not your W-2 wages or your self-employed income or your retirement income. Now, for the ability to do that, those rates can be anywhere from 1.5 to 3 points over a given rate. So you do have a higher rate on those, but it does allow you to get into some investment properties. A lot of people use them for Airbnbs. So that's the skinny on investment properties. If you have any questions, of course, reach out to us and we'll get them answered.